Well, here we are on a Friday, and we're watching with keen interest what's going on in the markets. And it's very intriguing, the directions that they are going today. I want to start out by looking at the outside markets, and then we'll get over to the grains here in a second. Now, on the Dow Jones Industrial Average here, so far today, we are seeing a little bit of pressure. You will note that on September futures, we got as high as 34,009 before falling away from that. And now we're pretty close to the low of the day. We're at 33,692, and we're currently down 289 points. Now, on the other hand, you look at the dollar value today. This has been very interesting. September futures now up at 108.065, getting into some rarefied air up here. And it's up 650 points once again. Remember how we sold that thing off here for about a week straight? Well, it's putting it back on once again here. So a strength in the U.S. dollar always makes it a little tougher to sell our stuff to foreign countries. Now, the crude oil market had sold off early on, and now September futures are at 90.73, and that would be 23, now 27 cents higher on the day. Oh, I'd say we're within about $0.50 of our high from last night. Now, on the grain side, interesting here, where we have the corn, it kind of ebbs and flows a little bit. Right now, it's starting to get a little bit of firmness under it. We have September 3 1/4 higher. We're at 623, and December 4 1/4 higher at 620 even. In that soybean market, we had some pretty intense selling in the open. We're still seeing double-digit losses here. September currently down about 15 cents. We're at 14.80 but November is down 13 1/4. It's at 13.92. Boy, it is solidly under that $14 mark right now. Now, on the wheat, though, a whole different story. We had been selling that early today, and now look at September Chicago wheat, 11 1/2 higher. It's at 743 3/4, now 12 1/4 higher, and that's only 2 ticks from our high of the day. So wheat all of a sudden starting to catch a bid here. Kansas City, you have September 20 higher. We're now at 832 1/2. Well, what a switch from yesterday, my goodness. In Minneapolis wheat, September is now 13 higher at 865 3/4. And in the cotton, we have new crop December, 258 points higher at 115.28. So there it goes again. It got as low as 111, and now it's up well above 115 here this morning. Very choppy action. We're joined by Chris Swift of Swift Trading in Nashville. Interesting market action here. Volatility seems to be the name of the game, at least here on the wheat and maybe the cotton market today, Chris. But does it mean much today on a Friday?
Well, I tell you, Marlin, you got to have your big boy pants on to trade these markets as volatile as they are. We have really watched a tremendous amount of volatility this week with no direction being picked at all. And we're finding the fundamental situation very interesting. In the corn, we believe the Southeast is going to be very void of product. The North, the heart of the Corn Belt, is going to be having record yields or at least trendline yields with them. So it's not as much as what we're concerned about the price of corn as it is the basis on corn. And down south there, I can tell you it's already high and probably going to continue to get higher as we are just we're cutting silage right now. The silage is not that good, and it's getting a precursor to what the kernel corn crop is going to be, and it just is not going to be that very good.
So if you're a corn producer, how do you capitalize on that?
Well, you know, your basis is a big thing, storage. So storage could be a real ability. If you have storage ability, you ride through whatever downturn you have at harvest, and then as the harvest comes in and you see you have lower numbers, we know those lower numbers in the future will be projected hopefully with a higher price. So storage is going to be the key to the producer, and to the end user, it's going to be trying to find someone that will lock that basis in for you. That's where we're finding the problem. Nobody wants to assume that basis risk.
Can you imagine if there would be a shortage of rail cars this fall? I mean, how that would complicate things?
We are already looking at every alternative, and what we're finding is that even river barges are not as good because most of them are loading only, with only a few facilities having unloading capabilities to them. So farmers bring it all into the river, they sell it, they throw it on a barge, and down the Mississippi it goes. But trying to get it off of there is a little bit different. Most all of the unloading is going to be down in the Mississippi port area there and not anywhere up and down through the river.
My goodness, as if we need more complications. Well, thanks for pointing that out. Chris, we're going to come back in a moment and we'll talk about our livestock trade here on a Friday right after these messages. Well, we're back and we're talking with Chris Swift of Swift Trading right now. And Chris, you focus a lot on the livestock sector, especially on cattle. And that's important today because we do have a cattle on feed report coming out after we close up for the trading session today. Of course, can't do anything about it until we come back on Monday. But from your perspective, what do you think the trade is looking for in this report?
We saw the trade guesses come in at 100.7 on feed, 98.5 placed, and 97.1 marketed. Those numbers really aren't anything devastating one way or the other. It's going to be a quarterly report, so watching that heifer placement is going to be really interesting to see if we're continuing to place more heifers, if we're continuing to hold the Cassini back. But that's what we'll be most focused on, is to see what that quarterly heifer placement is over what it has been in the past.
So how do those guesses compare to what you folks at Swift Trading are thinking right now?
You know, we believe that there's going to keep 100% on feed for a while. The drought is continuing to push cows into the market. It's continued to keep heifers onto the market. And we just haven't had a rainstorm out enough that would say, boy, we can heal these pastures up and put cows on them and everything's going to be okay for next year. So I think we're still far behind on any kind of expansion. So as long as liquidation continues and we do have increased packing capacity, things might be a little more vanilla than they are chocolate or strawberry.
Well, okay. If you happen to hear Tim Ross's weather forecast, I mean, they're talking maybe 2 to 6 inches of rain in the northern part of Texas over the weekend and by early next week. If that would come to pass, would that change the whole dynamic of the market before we come back in on Monday and the trade has a chance to take a reaction to the cattle on feed report today?
It will help, but I don't know if it'll be the drought breaker that they need, but clearly it will help. I've seen that when the ground is hard and compacted like that, most of the water just runs off. So it could be devastating for the rains, the holding ponds, stuff like that. But I doubt very seriously that it's going to be the drought-breaking rain that's going to allow us to produce hay next year. And it might be the start of it, but we're going to have to start somewhere. But we're just nowhere in a position to be able to cut hay yet for the next year.
Okay, well, let's take a look at current prices then. We'll see how the trade is getting set up ahead of the cattle on feed report. So on live cattle, we are higher today, and October is gaining 62 cents. We're at 145.37, off of our earlier low of the day here by, we'll call it about half a dollar. December is up 40 cents right now over on the feeder cattle. We have the September contract going down 40 cents at 184.87. Kind of interesting there. October is now down 82 cents on the day. On the lean hog market, well, we're following through with some selling after that washout yesterday. But today, the weakness is on the deferred contracts, not the front. October lean hogs are down just 12 cents at 93.17. But you go to February and beyond, and they are all over $1 weaker as it stands right now. Well, thanks again, Chris, for the information. Chris Swift of Swift Trading with us from Nashville. So, Suzanne, I'll turn it back to you.